This stock will surprise everyone. This is not financial advice, but I think it's an okay idea to say it could be good to buy $50 of this before November 30th. The company is ticker symbol Teva, Teva. They are a generic drug producer. They recently came out with a GLP-1 drug, which is the Ozempic semaglutide sort of get thinner without doing anything movement. And the stock went on a tear since August when they mentioned that. So could cut into Novo Nordisk's sales in that segment. This is their 9th consecutive quarter with higher revenue growth than the previous quarter, which is pretty incredible. $4.5 billion in revenue this quarter alone. Let's jump into the chart. Let's jump into why it could be a good idea to invest in a generic drug company right now and why there's less risk than in investing in an early stage biotech. It's not financial advice.
This is Sam Putnam.
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 So here's Teva. They're in Israel. They don't actually have a big institutional ownership, but because it's a drug manufacturer, as opposed to an early stage biotech company, it seems lower risk to me. I could be wrong, but I think the fact that they have, I'm pretty confident actually, the fact that they sell 4 billion of generic drugs a quarter indicates that even if one of their trials or one of their sister companies or companies under their umbrella has a little bit of a misstep, has an FDA snafu, I don't think the stock is going to move down significantly. So that's a big sort of sigh of relief for these sort of healthcare companies. Here's the 9 consecutive quarters of revenue growth a year. This is from their website, tevapharma.com, investor relations. And generics is growing in the US, Europe, and international markets. So this is kind of what I'm talking about. Here's a new drug they have that's phase 3 ready. So a smaller company would say that, and that could be their only drug. And if I were to say it could be a good idea to buy that stock, you have to really be careful because that drug could fail and that company could start trading for less than the cash that it even holds. But because this is a $4.5 billion a quarter company, I think it's a different story. So here's a little bit more about what they're up to. One of their branded products, 600 million in sales in Q3 alone, which is up 40% year over year. They are looking into some phase 2 Crohn's disease drugs, treatments. And they also have some early stage drugs. So this one's looking for FDA fast track. But basically they sell generic drugs. So they have the first generic GLP-1 for weight loss. So if that sounds exciting to you, you're not alone. It's basically like a massive software as a service type opportunity, because you imagine you take this thing, you pay once, you lose weight, and you have fewer cravings. It's hard to think that someone's going to not want to pay for it again. So that's why investors are so excited about GLP-1s in the past 2 years. And here's the chart. I mean, the chart looks exciting even if you knew nothing about what this company was up to. Of course, the chart is actually often the leading indicator for why to focus on one of these companies in the first place. I mean, that's the process. I don't think it's surprising. You scan through thousands of stocks, and then you can look at the individual day moves, but in general, you look at the full day moves, especially look around earnings times. And on a weekly chart, even, you can see how this starts to look interesting. So, made it over this high from 2024 for the first time this year. It's holding up on earnings. And this level has a lot of volume. Earnings day, of course, when the info gets disseminated and all the funds buy it if they like the earnings. And now that it's above that level, you can use that level to say if it starts to drift below there, it means those same funds don't want to own it anymore. Which means you certainly don't want to own it. If it does hold that level, well, there's probably interest. So very important to respect that 24 and change, 24 and a half. So you're really risking 50 cents a dollar to make 10.20. So that's the idea. That's TIVA. That's the chart. I'm not sure you really have to worry about all of these risks. Of course, there are a lot of risks with a massive company like this. They did have this recall for this blood pressure medication due to an impurity. All these companies are going to have class action lawsuits. This is a $35 million settlement that they improperly listed patents. That's the allegation. And TIVA is going to say, well, that's not the case. And, well, I don't know how this makes any sense, but they must have put up patents that they didn't actually own in an attempt to be the only generic provider for this asthma inhaler that this lawsuit is about. But the part that's not in the weeds is 35 million doesn't really matter for a company that's 4.5 billion. That's the reality. So that's the idea. TIVA. If you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want help, head over to stockscommunity.com, and I'll see you in the Discord tomorrow morning. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.